Good morning and welcome to this weekly market update from AGM Markets. Today is the 7th of December 2012. What we'll do in today's video is just go through the charts basically. So we'll go through Euro dollar cable, dollar yen, dollar Swiss, Euro sterling, which we haven't done in a while, but there's some nice moves on that, so I want to show you that, and gold. Won't make any trade calls recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website www.agmmarkets.com. On most of the, well, apart from the weekly charts, most of these charts have 3 moving averages. So the red one is a 55 simple, the purple is 100 simple moving average, and the gold is a 200 simple moving average. Okay, let's have a look at the Euro dollar weekly chart. What do we have on this chart? Well, first of all, I mean, the last few weeks have been very bullish. Nice 3 sort of weekly bullish candles there. We've also closed above that 55-week moving average, which is a key close in my opinion. I mean, you see it's been chopping around this level for quite a while now. And we just need some key confirmation. We had that confirmation last week, but interestingly we have started to reverse this week, and the main reason being we do have a trendline resistance up here, which you can see. Yes, we have broken above that, but it's now come back under. So I mean, this current weekly candle is looking very bearish indeed, pretty much a reverse hammer candle. But one thing we have to remember is that it is NFP day today, and we'll look through the Forex calendar in a minute, but we can get some big moves in that. So I mean, if it's a good number, I'd expect risk appetite to get a boost, and that should push Euro dollar upwards. But sometimes if it's a very good number, then the dollar does get strong as well. It is very, very tricky, and that's why that's why I kind of recommend that you do trade technicals and not trade the news, because it's a risky game trying to have a punt on NFP. But yeah, anyway, so this weekly chart is looking, well, the current weekly candle is looking bearish, but I would not be surprised if it did rip it up, rip towards the upside today. And I mean, this weekly candle really could change, all depending on an FP. I mean, especially if we get a sort of 200 pip move towards the upside, this candle could look completely different. So but no, it'd be very interesting, the weekly close, especially on this chart, because I mean, if it does rip towards the upside, then it could make official breaking confirmation above this trend line. And of course, if it stays out how it is now, then we could really start to sell off the next few weeks, because it is a very bearish candle. On the daily chart, what have we been having? What have we been seeing? Sorry. Yeah, so on this daily chart, I mean, you've got a nice a trend line support around here, and that kind of coincides with sort of 100 day moving average as well. But I mean, the last few days we have started to retrace, especially yesterday. There's a big sort of sell-off, and that was all because of Draghi coming out and saying that, well, and he said that they've been discussing negative interest rates, which of course will weaken the euro. Another thing to take note of is this 55-day moving average. You can now see that we're starting to test that, and previously acted as a nice support there, so would not be surprised to see this start to bounce. A lot of people will be, well, would not be surprised that a lot of people will be starting to buy off of this key level. But keep in mind this trend line support, because that's the sort of bigger picture. And also for the shorter term players, I mean, if we flip it to the 4-hour chart, and you can draw your fib from the lows to the recent high here, we still have a long way away to the 50% retracement, which is my personal favourite fib level. We can also see on this 4-hour chart that we're testing the 100 bar moving average as well, but I'll not be surprised to see it come down and test this 50% level. Also, its previous support around here to your left, and that kind of coincided with the 200 bar moving average as well. But no, very interesting chart. Euro has been playing out very technically indeed. I mean, especially on the daily, if you see where that sell-off came around, if you draw a resistance line above these levels here, you can see that is where we tested yesterday, to pretty much to the pip, and we start to sell off around that sort of 31.30 level, we got a nice retracement, and it does look like it wants to keep on retracing, but I mean, with NFP it can do anything. So, but that's how I'd have my chart set up, to be honest with you. Okay, let's have a look at the cable weekly. Similar to Euro, really, this current candle is starting to look very bearish, but would not be surprised to see it reverse after NFP. Nothing massively of interest on this weekly chart, to be honest with you. I mean, we have the trendline support there, and you've got the trendline resistance up here. But no, nothing massively interesting on this weekly chart. So I'm going to flip to the shorter term time frame here. And you can see we're also starting to get the last few days have started to sell off. But and surprise, surprise, with similar to Euro, really, we've got this 55-day moving average just below it, and that could act as interesting support here. And also another thing I would keep up on my chart, just to keep some perspective, is this recent dip low here. Draw a fib from the lows to the highs, and keep an eye out to see what happens if we do get further sell-off. What happens at the 50% retracement, which is standing at 1.5980. And on the 4 hour, it's probably going to be the same. Yeah, the similar sort of move, really. That is how I'd keep my chart set up, really. Very, very similar to Euro. It's all about if we get further sell-off, and keep an eye out on the 50% retracement if it comes down and test it. Dollar yen weekly looking very, very bullish still. We're well above this 100-week moving average now. Last week's candle, a nice bit of lower wick on that, and also with this current weekly candle, nice bit of lower wick. So it looks like it is just trying to grind higher here. If we flip it to the daily, we had a very nice fib move. If you go from the lows to, oh no, that's the wrong chart. So I'm thinking of Euro Sterling. Ignore me on that one. What I would be looking out for is if we do get any sort of retracement, draw a fib from the lows to the highs there, and see what happens if we do get a retrace. I would not be surprised if we got a retrace and it bounced down off the 50%. But no, nothing really majorly of interest really on this dollar yen chart. I think there's much more interesting charts in my opinion. If we flip it to dollar Swiss, one thing I would keep a note on is this key support level. That's what it's been all about on this dollar Swiss weekly chart, the sort of 0.9258 acting as key support, and we are starting to get a bounce. But you can now see we have this 55-week moving average trying to cap it as well. So yeah, it's just playing that sort of tight range really in between that 55-week moving average and this key support at the 0.9250. That's the level that you need to be focusing on, in my opinion. I mean, if you flip it to the daily, you can see we've got these key bounces from especially rounded to the left and around here this week. We also have the 55-day moving average, which is testing as well. And if we break above that, then you've got that 100-day moving average there. Similar to Euro, instead of on Euro, we have the trendline support. On dollar Swiss, as it's been sort of negatively correlating, we have the trendline resistance there. So I'd literally just keep it set up like that. And you could also play a fib from the highs there to the lows and look for any fib bounce off the 50% if we reached that level. Euro Sterling's been a very interesting chart. First of all, we will have a look on this weekly chart. I've posted this up on our Twitter feed, MRC_markets. You can see here, I'll just draw a couple of arrows up. How do I draw it up? You can see around here, there's one arrow there. Basically, I'm just highlighting here key bounces off of this 55-week moving average. We had one there, and also this week, really clean bounce off this 55-week moving average, and we're starting to sell off. So it's very, very technical, and that's why we use these moving averages, because price does tend to want to go back and test the moving average, and it's all about how it reacts. So if this weekly candle remains very, very bearish, as it is similar to Euro Dollar, then I will not be surprised to see a significant sell-off over the next few weeks. But more interestingly, if we flip it to this daily chart has been acting very, very technical, and purely on a Fibonacci basis. So the first sort of move that I was looking at, I think we spoke about this last week, is a fib from the lows to the highs around here. So that's the low down there, and then up to the high here, which also got it's also bounced off the 200-day moving average. Very, very technical there as well. So we sold off at the 200-day moving average. Then we came down and tested the 50% retracement and also 55-week moving average. A lovely confluence zone there, and you can then see that we've got a nice sort of pop towards the upside, nice coil towards the upside, and we took out those highs. And now what we're seeing, if you extend this fib retracement up to the new highs up there, you can then see that we then sold off, and we've come down and we've tested this 50% retracement again at the 0.7962, and a lovely bounce off that 50% retracement there, pretty much to the pip, and we've now started to call towards the upside. So very, very technical, and that's how you can trade these fib levels. And also, I mean, a lot of people have had this trendline support up here as well. Very, very technical indeed. I mean, you really can't get much more technical than that. But anyway, the new fib that I'll now be looking out for, if you move this fib to the lows here and then bring it down to the new high, so this is sort of a recent dip move, you can see, bang, surprise, surprise, right off to the pip, 50% retracement at 0.8053. So a nice sort of recent swing low there to the recent swing high. We've retraced it 3 candles down, bam, right off the 50%, and also the 55-day moving average here. And I would not be surprised to see if we did reverse, especially if we get a good NFP number, because that will be positive for risk appetite, and we call towards the upside. So that's all I'd really be focusing on this euro sterling chart. It's a very, very technical fib move there. And you can, I mean, especially when they bounce off to the pip, you have to be thinking the reason they're bouncing off to the pip is because big traders have got key entry orders at this level, and you've got to think, if you're on the side of the big boys, then I would not be surprised to see it bounce up and call towards the upside. So keep an eye on that. That's all I'm really focused on. If you zoom to the 4-hour, you can see it a bit more clearer there, but I mean, you can keep on either chart, it's up to you. I mean, you can look for a retracement off the 4-hour or even off the 1-hour if you want, although that has kind of already happened. But no, very interesting chart there. Okay, that's done for the Forex. Let's have a look at gold. Gold on the weekly, have to keep this trendline support in mind. As always, we keep that on there. If we flip it towards the daily, sorry, bear me a sec. If we flip it to the daily chart, you also have the trendline support around here, which we'll keep an eye out on. And also the recent fib move. A lot of people will be keeping this up on their charts from the recent swing low there to the highs. Keep an eye out if we do come down any further, because the 50% will be lurking there at around 1661. But an interesting chart, also quite choppy as well on gold. A lot of people will be keeping an eye out on this mini trendline support there, which is holding. We had a nice sort of daily candle yesterday. If you zoom in, a nice sort of reversal candle, so I wouldn't be surprised to see if we popped up and then tested this 100-day moving average, which is at around 1720. But nothing majorly of interest on this chart, to be honest with you. It looks like it, I mean, on the weekly it looks like it still wants to retrace, to be honest with you, so I'll not be surprised if it did come down and sell off. But it could do either. I mean, it's kind of a 50-50 one really. The weekly looks like it wants to come down further, but the daily looks like it's done a little retracement and it wants to start popping back up. But once again, it will be all about NFP. NFP will have a big impact on gold, so a wise thing to do would be to stay on the sidelines and just wait for that number and see how the market reacts, and then let the dust settle, and then trade from there. Okay, that's done for the charts. Let's have a quick look at the Forex candle and see what we've got coming out for the rest of the day. I mean, already today we've had UK data out, manufacturing production, month-to-month numbers. That came out at 9:30. Really weak numbers there, minus 1.3% against the forecast minus 0.2%. At 10 AM we've had Draghi speaking. I'm not sure what he said there, but it didn't really impact the markets too much, especially as he spoke yesterday. Most probably would have been reiterating what he said yesterday. Mate, we have some Canadian data at 1:30. We'll have to have a look at dollar CAD next week. And at 1:30, of course, it is the US non-farm employment change numbers forecasted at week 89,000, especially from the previous 171k there. So we're expecting a much weaker number here. Anything above 100k will be bullish, in my opinion. But of course, I mean, it's still a bit weaker than last month, so it's a very interesting number that we're expecting a much weaker number there. And the employment rate is expected to stay the same, which is interesting, at 7.9%. And to finish off the week with the US preliminary University of Michigan consumer sentiment data, that's forecast at 82.4 from the previous 82.7. Okay, then that's all for today. I hope you enjoyed this video. Have a great rest of the week trading, especially with NFP. Keep it careful, keep it tight as well, and yeah, good luck. Have a great week trading. Catch you next week. Thanks for listening.